Hello everyone, welcome to Cryptocurrency Mobile Mining and Trading. I'm Dixon and I'm excited to have you here. After countless hours of research and testing, I'm here to bring you the most reliable, real-time updates, insights, and strategies to help you stay ahead in the world of crypto mining and trading. Let's explore opportunities, learn together, and grow our crypto knowledge and profits, all from our mobile devices. Before we dive in, make sure you hit that subscribe button, give this video a thumbs up, and smash that notification bell so you never miss an update. Let's get started. Today we're looking at some major news that's shaking up the crypto world. First up, let's talk about the big one, the approval of spot Bitcoin ETFs. This is a monumental step for the industry. What does it mean? It means traditional investors can now get exposure to Bitcoin through their regular brokerage accounts, just like buying a stock. This has opened the floodgates to institutional money, bringing a new level of legitimacy and stability to Bitcoin. We're seeing major players like BlackRock and Fidelity jump in, which is a huge vote of confidence. This increased demand is a key factor driving Bitcoin's price and could set the stage for a new all-time high. Next, let's discuss the Bitcoin halving. For those who are new, this is an event that happens roughly every 4 years where the reward for mining new Bitcoin blocks is cut in half. The next one is right around the corner. Historically, halvings have been followed by significant bull runs. Why? It's simple: supply and demand. The rate at which new Bitcoin is created slows down, making the existing supply more scarce and, theoretically, more valuable. If demand continues to grow, especially with the new ETFs, this supply shock could send prices soaring. We're talking about a potential catalyst that could define the market for the next couple of years. Now, let's shift our focus to Ethereum. The Denkin upgrade was a game changer. This wasn't just a minor tweak, it was a major overhaul aimed at scalability. The introduction of proto-danksharding has drastically reduced transaction fees on Layer 2 solutions like Arbitrum and Optimism. We're talking about fees dropping from dollars to mere cents. This makes using decentralized applications on Ethereum much more affordable and accessible for everyone. It strengthens Ethereum's position as the leading smart contract platform and paves the way for mass adoption of dApps. From DeFi to NFTs and gaming, the future for Ethereum's ecosystem looks incredibly bright. And speaking of NFTs, they are making a huge comeback, but not in the way you might think. We're moving beyond just digital art and profile pictures. The new wave is all about real-world utility. Think about NFTs as digital tickets for events, proof of ownership for luxury goods, or even in-game assets that you truly own and can trade. This integration with tangible assets and services is what will drive the next phase of NFT adoption. The market is maturing, and the projects that focus on real utility are the ones that are gaining serious traction. It's a space you definitely want to keep an eye on. So with all this happening, what are the price predictions for 2030? Let's get into the analysis. For Bitcoin, with the combination of ETF inflows and the halving supply shock, many analysts are incredibly bullish. Some reputable predictions suggest Bitcoin could reach anywhere from $250,000 to even $1 million per coin by 2030. This is based on the idea that Bitcoin will solidify its role as digital gold and a major store of value in the global economy. As more institutions and even nations adopt it, its market cap could rival that of gold. What about Ethereum? With its scalability improvements and dominant position in DeFi and NFTs, the potential is massive. Predictions for Ethereum by 2030 range from $20,000 to $30,000. Its value is tied to the growth of its entire ecosystem. The more dApps that are built and used on Ethereum, the more valuable ETH becomes, as it's the fuel that powers the network. The Denkin upgrade was a critical step in unlocking this potential for exponential growth. Now, before we continue, if you're finding this analysis helpful, please take a moment to hit that like button and subscribe if you haven't already. And if you have any questions so far, drop them in the comments below. I read every single one and will do my best to answer. Your engagement really helps the channel grow, and I appreciate every one of you. Let's talk about some other promising altcoins. Solana has shown incredible resilience and is a major competitor to Ethereum, boasting high speeds and low transaction costs. Its ecosystem is booming with projects in DeFi and NFTs. With its continued development and strong community, some analysts see Solana reaching over $1,000 by 2030. Then there's Ripple, or XRP. The outcome of its legal battle with the SEC will be a major factor. A favorable ruling could see XRP being widely adopted by financial institutions for cross-border payments, which is its primary use case. If it succeeds in capturing even a small fraction of that massive market, predictions of $5 to $10 per XRP by 2030 could be conservative. We also can't ignore the rise of artificial intelligence in crypto. Projects that merge AI with blockchain are creating innovative solutions. Think about AI-powered trading bots, decentralized AI marketplaces, and intelligent oracles. Coins in this sector, like Fetch, AI, or SingularityNet, could see explosive growth as both AI and crypto technologies continue to mature and integrate. This is a high-risk, high-reward area, but one with incredible potential for the coming years. Another area to watch is real-world asset tokenization, or RWA. This involves bringing assets like real estate, stocks, and bonds onto the blockchain. It makes these assets more liquid and accessible to a global pool of investors. Projects focused on RWA, like Centrifuge or Polymesh, are building the infrastructure for this multi-trillion-dollar market. As regulatory frameworks become clearer, this sector is poised for massive expansion, and the associated tokens could see significant appreciation by 2030. Of course, we must address the risks. Regulation is the big one. Governments around the world are still figuring out how to approach crypto. Harsh regulations could stifle innovation and negatively impact prices. Market volatility is another key risk. The crypto market is known for its dramatic swings, so it's crucial to only invest what you can afford to lose. And finally, technology risk. Bugs, hacks, and network failures can happen, so always do your own research and understand the technology behind any project you invest in. So how should you position yourself for 2030? Diversification is key. Don't put all your eggs in one basket. A well-balanced portfolio might include a larger allocation to established players like Bitcoin and Ethereum, with smaller allocations to promising altcoins in sectors like Layer 2s, AI, and RWA. And most importantly, have a long-term mindset. We're not talking about getting rich overnight, we're talking about investing in a transformative technology over the next 6 years. Stay informed, keep learning, and be patient. That's a wrap on our deep dive today. We've covered the Bitcoin ETFs, the halving, the Ethereum Denkin upgrade, the NFT comeback, and some exciting price predictions for 2030. I hope this gives you a clearer picture of where the market might be heading. Thank you so much for watching. I'm Dixon, and it's been a pleasure sharing these insights with you. Remember to subscribe, like, and hit that bell icon to stay updated. If you have any questions or topics you want me to cover next, let me know in the comments. I'll catch you in the next video.